All right, my name is Chris Campbell. I'm a practicing CPA, and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I want to talk about the ability to pull money out of your company on a tax-free basis. This could be applicable to any entity you may have, LLC, corporation. Most of those entities, it does create some sort of a taxable transaction to pull money out of your company, whether that be a distribution, which technically doesn't create tax, but it kind of messes with your basis without getting too technical there. And then you have your withdrawals or distributions or salary. I wanted to talk about utilizing the loan from the company to the owner as a way to pull money from the company without having much taxification. A loan is not considered income. So what one be able to do is have the company create a loan, transfer the funds to said owner, and the owner can just pay that back over time. Now, I want to leave the caveat. This is a pretty aggressive move, not necessarily fraudulent, but it's aggressive because it leaves the door open for folks to say, oh, I'm just going to continuously loan money to myself without having any intent to pay it back, and you just continue to go and not pay taxes, and you're still having the benefits of the withdrawals. That abuse does exist, so I do want to lead with a tone of caution is, hey, don't do that. But if you do it within reason, there are ways to protect yourself so that if you were to get audited, it will be documented as a clean loan. The first thing is that you actually have to draw up an agreement. So draw up a loan agreement between the company and yourself, laying out the terms of said loan. So you got to do that. And you also have to stick to that payment schedule. So if your agreement says that you're going to pay X amount of dollars every month, show that transaction coming from your personal into the company coffers each month. Another thing is make sure you charge interest. If you do below market, that shouldn't be a problem. You don't have to charge yourself out the wazoo either, but whether you're at market or below market, just make sure that you're charging something and stick to it. Charge interest, a couple points, figure out what the payments are, and make sure you make that payment, even if it's a situation where you're taking a salary or a guaranteed payment from the company. What you can just do is have this thing set. You're withdrawing or withholding a certain amount from your guaranteed payments or salary, and that goes towards satisfying the payment. Again, you want to make sure that you document all of those things so that if you get called out, you'll have the documentation to get away clean with it. So those are things that you have to do to make sure the loan is legit. When are times to do it? Time to do it, or times to do it, is you want to make a big purchase. You can use your company. It's kind of your lender versus a credit card or some sort of other form of debt. You can use your company to be your lender. You want to make a big purchase, whether that be a car, a wedding, things that might be of personal nature that you may need a lump sum of cash for. This would be a good way to access that cash without taking the tax hit, because it might bump you up to a different bracket, or you're paying taxes on those funds. So those are scenarios that I would suggest to do it. Again, you don't want to get too addicted to it, because if you keep showing loans that aren't being paid off, that can prove to be a bit problematic to the IRS. So use it sparingly, but it is a good way to draw lump sums of cash from your company, and allows you to use your company as your bank. So that's all for now. So if you have any additional questions about this topic or any other tax, accounting, finance questions, feel free to reach out. Happy to help. All right, that's all for now. I'll see you in the next one.